my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. An interesting immediate countering combined bullish open and close white Mariposa and bullish engulfing pattern on Friday. This effectively negated the previous session's key reversal down, as it also closed over the medium moving average, currently at 120.55, for the first time since early March. We now have above the crossover of the neckline of the January to February reverse head and shoulders continuation pattern and the 2021 downtrend, both currently at 121.16. Beyond that is the old March 2018 low at 121.52. So far today, a move up to the crossover of the neckline and the downtrend and an immediate pullback down. Seems this crossover is quite potent right now. However, please be aware the two lines separate from each other from today, and their combined resistance will diminish in value accordingly over time. Cable, aka sterling against the US dollar. Another just pattern on Friday. This time it was a reactionary bullish harami, just, after the previous session's key reversal down, but also only just. Prices were again halted by the short moving average below, currently 138.29, but this time closed over the admittedly lightweight short medium moving average, currently 138.71, just that is as well. Overall, we're still well within the June to September 2020 bullish shift pitchfork, the lower time below, currently 137.19, and the middle time above, currently 141.78. Please remember, this pitchfork has given the bullish angle attack of this market since September last year. One final point, the lower time continues to be partnered with the rising medium moving average, currently 137.42, which has been an effective barrier these recent weeks. So far today, pull back up through the lightweight short medium moving average. Seems the short moving average is more potent than the short medium moving average of support right now. Euro sterling. Wouldn't you just believe it? Someone out there knows the technical analysis possibilities of this market and is playing around with the potentials. We had a fourth bullish white soldier on Friday and a continuing follow-on to the recent bullish piercing line pattern. The reason for my earlier statement, though, was that all it needed on Friday was to peak at or over 87.19 and to close over 86.80 to create a weekly key reversal up. Well, the high on Friday was 87.18, one tick under the requisite high necessary to make a weekly key reversal up, even though we had a close well above 86.80. Thus, it was not a weekly key reversal up. I suppose one can put this down to the earlier highlighted highs of February and April at 87.12, 87.19 and 87.30. Meanwhile, below we have the April 2020 lower support at 86.69, and now the April-based uptrend currently at 86.42, with possible aspirations of that being an ascending triangle pattern. Looking topside, we have the Spectre dropping from above the medium moving average, currently 87.72. Overall though, and with a week to go, we still have the chance for a monthly key reversal for April. Prices need to close on the 30th of April either above 86.70 or below 85.10. Currently, we've moved into a possible monthly key reversal up right now, though with the way the weekly key reversal up was denied last week, this now has a question mark over it. So far today, peak higher, just enough to satisfy those who wanted a print at 87.19, but then a pullback down, though not by that much necessarily. US dollar against the Indian rupee. A bearish opening black Mariposa and a second bearish black crow on Friday. Interestingly, the low of the day was right on the rising late March to date uptrend, currently at 74.86. Now above we have the August 2020 high at 75.31, and above that we have still target X4 in the 75.80 area, the target for the double bottom formed over this year. though I have a suspicion that this may be retired soon. The action on Friday further strengthened the idea floated last week that we may have one of two, maybe three scenarios: a possible double top or an ascending triangle, both acute and both formed over April, and an outside possibility of a bullish halfway hesitation pattern. Now it depends if the previously mentioned uptrend will hold. Well, so far today, a further drop, though looking a little bit like an indecisive doji cross, but it's a break below the uptrend. Though early, it seems the idea of a double top has suddenly come to the fore. US dollar against the Brazilian real. A bullish harami on Friday, and a counter to the previous session's bearish opening long black Marubozu. Although a bullish pattern for the day, it was also a second close below the recent sideways triangle. This could nevertheless still be a false break lower. Just be cautious, as despite penetrating the support of the recent 50% Fibonacci line at 544.41, the medium moving average also at 543.90, and the long moving average currently at 544 even, the market nevertheless closed back up over all of them. I might also point out, as I did on Friday, that we are ever so close to having two moving averages form a golden cross. Anyway, I still feel obliged to indicate the potential levels below that I've spoken about last week for the sideways triangle pattern. An initial target X would be in the 541.15 area, not that much if you are of an ask if you think about it, whilst a full target X1 would be in the 513.80 area. Make of those what you will. I'm just trying to tell you what I see. But just remember please, 6 out of 10 times the break on sideways triangles is on the top side. Additionally, being so far along the triangle as we were, we have a high degree of false breaks and pullbacks as well, something like 60 to 70% of the time. So please watch carefully. US dollar against the Mexican peso. A counter to the counter bearish engulfing pattern on Friday, but only just. Additionally, it was a close back down right on the breached and important early March to date downtrend, currently at 1977.58. It's worth noting where this original bearishness came from and why we seem to be slowing, or at least altering the speed of descent. To recap once again, the recent bearishness was a continuation of an idea I raised 3 weeks ago of, and I quote, "A recent action also leaves the way open for a possible descending wedge, descending triangle, or even a double bottom pattern." End of quote. We've already achieved the descending wedge pattern target. What we now have are two possible head and shoulders top, one from mid-January to late March and another from late February to early April. First case, we have an initial target X3 in the 1971.70 area, with full target X4 down in the 19 even area. Second case, we have an initial target X1 in the 19.5 area, with full target X2 down in the 1885.5 area. This only leaves the idea of a possible double bottom. This intraday countering and hesitation we've seen is all part of the market target X3. However, the idea of a possible double bottom will depend on X1 holding, or at any point between where we are now and where target X1 is. I've repeatedly stated in recent days, all these lower targets depend on the market not breaking the steep early March to date downtrend. Denting it is fine. Maybe realigning it to a shallower angle would be good. But the essence has to be maintained if the bearish scenarios are to come true. That is what needs to be looked out for. Well, so far today, we're outside the downtrend again. But the market seems unsure. This is a mirror to the indecision we have seen in recent days, questioning the strength of the move lower and its ability to continue as prices approach target X3. Right now, today looks like a small, indecisive doji cross. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.